Welcome to the product training on for Life. Set for Life is a regular pay VUL product that can help our clients when it comes to their income protection, retirement, education, critical illness with the help of riders, and any major investments that they have. In this module, we learn the different features and benefits on what Set for Life has to offer. In Set for Life, you get to design your plan your way. So it's a completely customizable plan that could be suited towards the need of the client. That could be from income protection, retirement, education, critical illness, or major investments. Now, aside from that, you can also add an extra layer of assurance to your insurance by the help of riders. So you get to choose from the policy add-ons to get more protection benefits suited for your lifestyle. So let's go over the different features that we have here in Set for Life. So first, you get to see your money grow. Next, you get coverage up to the age of 100. You get rewarded for your loyalty. You get paid in reaching the age of 100. You live life without worry, and you can maximize your wealth. So let's start with our first feature, which is see your money grow. Now, with this feature, you get the advantage of investing in a variety of FWD funds that allow you to potentially grow your wealth. So you get to choose from different funds according to your objective and risk-taking capabilities. So whether you may be risk averse, risk tolerance, or a moderate investor, there is an FWD fund suitable for you. So with the funds, we have funds managed by three different fund managers, from BPI Asset Management and Trust Corporation to Security Bank Trust and Asset Management Group and FWD Life Insurance Corporation. So let's take a look at the different funds offered by these three different fund managers. Let's start with the funds managed by BPI Asset Management and Trust Corporation. So we got three funds managed by them. The first one being a peso fixed income fund. Okay, so in this fund invests in a diversity of high quality domestic government and corporate debt instruments and money market securities. So mainly bonds. Okay, so since this is a fixed income, this is conservative in nature. Okay, so following the risk return trade off, if you do decide to invest in a fund which is conservative or low risk, you can expect the rate of return to be relatively low as well. Okay, our second fund is the peso balanced fund. Okay, so if you check the risk tolerance, this is moderate or balanced. So you get a combination from the income fund or bonds, okay, which is invested in domestic or corporate debt instruments. And you also get a portion of this invested in the stock market or equities as well. Okay? And then the third fund managed by BPI Asset Management and Trust Corporation is the Peso Equity Fund. So this is a fund which is 100% invested in the Philippine Stock Exchange. Okay? So this is aggressive in nature. Now, why is it aggressive? Because the price is volatile. Okay? Even though it invests in the top corporations in the Philippines, since the price fluctuates, it is aggressive in nature. However, since it's aggressive, you can expect a relatively good return from this peso equity fund. Now, under Security Bank Trust and Asset Management Group, we have five different funds that we can offer to our clients. Okay, once again, it's based on their risk profile. So the first one is being the Peso Bond Fund, which is conservative in nature, since this invests in government or corporate debt instruments or government and corporate bonds. Next one you have is a moderate fund, which is our peso stable fund. So this would invest in both bonds and also invest in the Philippine Stock Exchange as well. The third fund is aggressive in nature, which is a peso growth fund. Okay, so this achieves long-term growth by diversifying mainly in equities listed in the Philippine Stock Exchange. Okay, now aside from that, we have two other equity funds. Okay, so we got a peso high dividend equity fund. Okay, by the name itself, dividend, this would invest in Philippine companies listed in the stock exchange who would provide good dividend returns. Okay? And then the last one is a peso equity index fund. Since this is an index fund, this will mirror the Philippine Stock Exchange Index. So whatever is the top 30 companies listed in the stock exchange, it will basically invest in those 30 companies. Now let's go over our funds managed by FWD. Let's start with our first one, the Global Good Peso ESG Fund, which is an aggressive fund. Okay, now since this is a global fund, this invests in the global market, basically outside the Philippines. Okay, and this would only invest in companies which is, first of all, good towards the environment. They have a good carbon footprint, the way they treat their employees as well, the social aspect, and the way these companies are governed. Okay. Now, according to research, if you compare an ESG fund to that of a traditional fund, you can actually expect a higher rate of return from an ESG compared to a traditional fund. Okay. Then the next one is a diversity fund, which is also aggressive in nature. Now, thanks to this fund, this will invest in different funds offered in the Philippine market. Okay, so it's a fund of fund. Okay, so it gives you flexibility and affordable exposure to a multi-manager investment fund with the aim to achieve long-term capital growth by investing in a diversified portfolio. Now, for the next two funds managed by FWD, which are both peso in nature, are going to be the peso payout fund. Okay? Now, the first one is the FWD Peso Nitro Global Payout Fund, which is aggressive in nature. Okay, now what is payout fund? Well, this is a fund designed to generate regular payouts on a quarterly basis. Okay, by investing primarily in a variety of asset classes, which include equities, equity related securities, debt securities, and convertible securities as well. Okay, so aside from capital appreciation, you got a quarterly payout that could be used for passive income. Okay, the next one is pretty much similar. However, this is a moderate risk tolerant fund, which is the FWD Peso Velocity Global Payout Fund. Now, take note, guys, for you to have access to these two funds will only be available in our product called All Set Higher. When we say all set higher, that means the minimum single premium should be at least 1 million pesos. Okay, in the next module, we'll go over all set and all set higher. Now, aside from our peso funds, we do have funds invested in dollar. Okay, so if our client invests in a US dollar currency, he can choose amongst our dollar fund. Okay, the first one being a Global Good USD ESG fund, which is aggressive in nature. Once again, this fund would invest in companies who have a good carbon footprint, which is good towards the environment, the social aspect on the way they treat their employees, and the way these companies are governed. Okay, so this allows you to participate in the long-term growth potential and resilience of global companies. Our next one is the Global US Dollar Equity Index Fund. So this basically tracks the total returns of the MSCI All Country World Index. Okay, once again, aggressive in nature. So this allows you to participate in the long-term growth potential of international economies. Now, our next two dollar funds are the US dollar payout funds. Okay, the first one being FWD Dollar Nitro Global Payout Fund, which is aggressive in nature. Okay, now this fund is designed to generate regular payouts. So you have a quarterly payout that can be used for passive income. Okay, this is done by investing primarily in a variety of asset classes, which includes equities, equity related This is done by investing primarily in a variety of asset classes, which includes equities, equity related securities, debt securities, and convertible securities. Okay? Now, the next one is moderate in nature, which is the FWD, Dollar Velocity Global Payout Fund. So, this would invest in fixed income securities, and a portion would be invested in equities. So, this emphasizes more on long term capital protection and stable growth. Now, to have access to these two funds, the product that we need to invest in is the USD All Set Higher Plan, which has a minimum single premium of 20,000 US dollars. Now, if you want to know more information about the funds we have just discussed, you can visit our website fwd.com.ph, where you can take a look at all the different funds, whether it may be peso or US dollar. Now, the funds on the website are categorized based on the risk profile. So you have the aggressive funds, you have the moderate funds, and you have your conservative funds. Now, let's take a look on how we can view and understand the fund fact sheet. So let's take a look at the Peso Equity Index Fund, okay? So under the fund facts, it will tell you that this fund is in peso. The dealing schedule is dealt daily. Fund manager is Security Bank. Risk profile is aggressive in nature. Currently, the net asset value is at 5,411,000,000 pesos. On the bottom, you can take a look at the current fund performance. So it's telling you the unit price as of October 6th, 2022, and there is a comparison versus the previous day of October 5th. Now, if you go lower, you can take a look at the historical fund performance chart. So you can take a look at the unit price of a single day by hovering your mouse over those dots on this chart. Okay? Then on the bottom, these are the fund returns. So it's telling you a fund return as of 1 month, as of 3 months, a year ago, 3 years ago, 5 years ago, and since inception. Now, if you scroll down even further, this is where you can view the top security holdings. So these are the top 10 companies on where this fund will invest in, and it will tell you the percentage as well. On the right, you can view the asset allocation chart, where there is 98.45% in equities and 1.55% that is in cash. Now, our next feature, you get coverage up to the age of 100. Okay, so the client can choose a sum assured which is flexible in nature in a VUL plan. Okay, so the minimum sum assured or the minimum death benefit would be multiplied by 5 based on the annual premium. So in this example, if the client invested 100,000 pesos, if you multiply that by 5, the minimum sum assured or the minimum death benefit that they can choose, that would be 500,000 pesos. However, if their premium is a lower amount, which is between 20,000 to 24,000 pesos annually, that would be the minimum sum assured that they would have according to their age bracket. The multiply by 5 of the regular premium would only apply if the annual premium is 24,000 pesos and above. Now, our clients have the option of increasing their sum assured, okay? So, this is our maximum flexibility table. Okay, let's have an example. Earlier, we had a client who invested 100,000 pesos. So, the minimum amount that they could choose, that would be 500,000 pesos in minimum death benefit. However, they could go a higher amount, okay? That would be dependent on their age and dependent on the payment term that they chose. Let's take an example over here. We have a client who's between the age of 31 to 40, let's say 35 years old, who decided to go with a 10 pay set for life plan. Okay, so the minimum sum assured, if it's 100,000, that would be 500,000 pesos. the maximum that they could choose would be multiplied by 24. So if I would go with a premium worth of 100,000, if I multiply that by 24, my maximum sum assured would be 2,400,000 pesos. Okay? So the client has an option of choosing anywhere between the minimum, which is 500,000, to the maximum of times 24 or 2.4 million pesos. Our next feature is be rewarded for your loyalty. So the longer you keep your money, the more you get out of your plan. That is because on your 10th year and every 5 years thereafter, okay, so that's on the 10th year of the policy, 15, 20, 25, for as long as your policy is in force, you would be receiving a loyalty bonus. Okay, now how much is a loyalty bonus? That will be equivalent to 2% of your average monthly account value for the past 5 years. Our next feature is you get paid in reaching the age of 100. So if the client outlives the contract, you will get your total account value if your policy is active once you reach age 100. Our next feature, you get to live life without worry. So in Set for Life, you can issue this plan to anyone between the age of 15 days old to 70 years old. Okay, that is upon application. Now for the payment period, you have 4 different payment options. You got 5 years to pay, 7 pay, 10 pay, and then you got regular pay. Now when we say regular pay, this can be paid up to the age of 100. Okay? Now for the basic premium requirement for Set for Life, if it's 5 pay, that's going to be 40,000, 7 pay, that's 40,000, 10 pay, 24,000, and regular pay, that would be at 20,000 pesos. However, here in Set for Life, we do have 2 mandatory riders, which is Safety Pro and Sure Pro. So once you attach these 2 mandatory riders, for 5 pay, together with the riders, we must achieve a minimum annual premium of 50,000 pesos. That is inclusive of our basic Set for Life, plus Safety Pro, and Sure Pro. For 7 pay, it's not an option because we do not have these 2 riders available in 7 pay. Okay? Now for 10 pay, once you attach Safety Pro and Sure Pro, our minimum annual premium should be 30,000 pesos. That's inclusive of Set for Life with Safety Pro and Sure Pro. And lastly, for our regular pay, the rider option is only going to be Safety Pro. Okay? So the minimum premium with the rider is going to be at 20,000 pesos. Now let's take a look on how Set for Life works. So we got a client here. His name is Kyle. He's a 27-year-old web programmer, single, still living with his parents. He's the only child, earns for himself and providing support for his parents who are about to retire in 6 years' time. Can you show him how he can greatly benefit from a plan like Set for Life with the auto rider attachment? Okay, so Kyle decided to go with a sum assured of 1 million pesos with a premium of 2,598.79 pesos per month. Okay, so he chose a 10-year to pay plan and he gets coverage up to the age of 100. So this is what it looks like. So Kyle decided to go with a 10-year payment term. His annual premium for Set for Life is at 27,000. Once he attached his 2 riders, Safety Pro, that would be 3,300. Sure Pro would be 429 pesos. He decided to pay monthly, so his monthly premium would be at 2,598 pesos. Now, at the end of the 10 policy year, Kyle's policy has been fully paid, and now Kyle is eligible to receive the loyalty bonus that starts on the 10th year, and that's every 5 years thereafter, equivalent to 2% of his average monthly account value for the past 5 years. Okay? On policy year number 20, his account value, assuming an 8% interest rate, would go up to 627,081 pesos. This can be used for whatever expenses Kyle may have. Now, on policy year number 43, okay, in case the unforeseen happens to Kyle, okay, FWD will give the sum assured amount as a death benefit. So our death benefit is going to be whichever is the highest between the sum assured, the account value, or the minimum death benefit. Lastly, if Kyle reaches the age of 100, FWD will give the total account value as the maturity benefit. Now let's go over the two mandatory riders that we have here in Set for Life, which is Safety Pro and Sure Pro. Let's start with our Safety Pro rider. Now, thanks to Safety Pro, FWD will pay the benefit amount if the insured dies due to an accident. Okay, now to attach this rider, the insured person should be between the age of 15 days old to 70 years old upon application. Now, this is available in our 5-pay, our 10-pay, and our regular pay variant. Now, in our system, Smart 2.0, you have two options of the coverage period that we would like to have. It's either coverage period up to the age of 60 or coverage up to the age of 75. Okay? Now, if the insured person dies because of an accident, the death benefit from this rider will be 100% of the benefit amount. Now, for the minimum sum assured for this rider, that will be equal to the basic plan Set for Life. However, we have the option of increasing it to a maximum of 500% of the sum assured. Now, the condition that we have here in this rider is the insured should die within 180 days from an accident, and such accident should occur before the expiry date of this rider. Let's take a look at Kyle once again. On policy year 43, sadly, Kyle got into an accident which resulted into the death of Kyle. Okay, so this time what is going to be payable? So first you got the death benefit from the basic plan Set for Life, which is whichever is the highest between the sum assured, the account value, and the minimum death benefit. Since his death was because of an accident, this time we are going to provide an additional 1 million pesos coming from Safety Pro. Now, in case the accident occurs during a public holiday in the Philippines, FWD will pay 3 times the benefit amount for this rider. Okay, so part of our policy contract, we have the following regular holidays and special non-working holidays included in the policy contract. So let's take a look at an example once again. On policy year number 43, sadly, Kyle got into an accident which was on a public holiday in the Philippines. So what's going to be payable? First, from our basic plan, Set for Life, we have whichever is the highest between the sum assured, account value, and the minimum death benefit. Now, since the sum assured for Safety Pro is 1 million and his death happened to be on a public holiday, we are going to give him 300% of his Safety Pro rider. So that would be now 3 million pesos coming from Safety Pro. For our next rider, we got Sure Pro for insured. So, in Sure Pro, FWD will waive future basic and rider premiums if the insured becomes totally and permanently disabled or is diagnosed with a covered critical illness. Okay, now to be eligible for Sure Pro, the insured should be between the age of 18 years old up to 60 years old at the time of application. Okay, for the payment period, this is only available in our 5-pay and our 10-pay variant for Set for Life. Okay, now when we say total and permanent disability, this is a condition that continues for 180 days or more and makes the insured unable to work in any occupation for compensation or profit. Okay, for critical illness, we cover the 42 major critical illnesses listed in Set for Health, given that we meet the following conditions: the 14-day survival period, the 90-day waiting period, and it should not be because of a pre-existing condition. Okay, now SurePro will terminate at the end of the paying period because the plan is fully paid, or if the insured reaches the age of 70. For Kyle's policy, his SurePro was only 429 pesos per year. That was 10 years to pay. Okay, now let's go back to our illustration once again. Now, on policy year one, sadly, Kyle is diagnosed with a covered critical illness or suffers from total and permanent disability. What's going to happen to his plan? He paid for the first year of the policy, and from year number 2 until year number 10 will be paid by FWD. So, overall, we have waived 280,669 pesos in total premiums over the 9 years. Now, in case the policy owner is different from the insured, the attached SurePro will be SurePro for owner. In SurePro for owner, FWD will waive future basic and rider premiums if the owner becomes total and permanently disabled, diagnosed with a covered critical illness, or if the owner dies. Okay, now the owner has to be between the age of 18 years old up to 60 years old upon application. This rider is only available for our 5-pay and 10-pay set for life. When we say total and permanent disability, once again, this is a condition that continues for 180 days or more and makes the owner unable to work in any occupation for compensation or profit. For critical illness, that's any of the 42 major critical illnesses covered in Set for Health, given we meet the conditions, which is 14-day survival period, 90-day waiting period, and it should not be a pre-existing condition. Now, the rider terminates at the end of the premium paying period because the plan has been fully paid, or if the owner reaches the age of 70. Let's take a look at an illustration here. This time our insured person is Luke, who's 5 years old. Okay, his plan is a 10-pay set for life with a sum assured of 1 million pesos for an annual premium of 27,000. He has Safety Pro, that's also 1 million for 3,430 pesos. And this time, the owner is his father, Kyle, who's 27 years old. Okay? So for SurePro for owner, that's going to be 532 pesos per year. So total premiums for 10 years is 30,932 pesos. Now sadly, on year one, either Kyle died, gets diagnosed with a covered critical illness, or suffers from total and permanent disability. What happens to the plan? Basically, Kyle only paid for the first year, and from year number 2 until year number 10, that will be paid by FWD. So in total, we have waived 278,390 pesos in premiums. Now for our last feature, you can maximize your wealth. You can maximize your wealth by doing top-ups. When we say top-ups, this is going towards the investment component. Okay? Now we got two types of top-ups available. That's regular top-up and ad hoc top-up. When we say regular top-up, this will be on top of the premium. Minimum amount per year, that would be 2,000 pesos, subject for a top-up charge of 5%. Our next top-up is ad hoc top-up. An ad hoc top-up is an unscheduled top-up. So anytime, okay? As long as the minimum amount is 5,000 pesos, which also has a top-up charge of 5%. Now let's go over the sample illustration that we have for Kyle's policy. Okay, so first of all, you got the basic premium, which is 27,000. That's over 10 years. The next one we have is a regular top-up, which is 2,000 pesos over 10 years as well. Okay, now you got your total living benefits. That's at 4%, at 8%, at 10%. Once again, this is only for illustration purposes. The actual growth will be dependent on the fund that we chose. Okay, then on the right, you have your sum assured or your projected death benefit, which is going to be whichever is higher between the sum assured, the account value, or the minimum death benefit. Okay, now we do have a portion here which is the amount allocated to the fund. As you can see, for the first 3 years, we have the premium charges, death benefit. Okay, now we do have a portion here which is the amount allocated to the fund. As you can see, for the first 3 years, we have the premium charges, hence the amount allocated to our fund is a lot lower for the first 3 years. Then for year number 4 to year number 10, we also do have our top-up charge, which is 5% or 100 pesos. So overall, 28,900 would be allocated to our fund from year number 4 until year number 10. Now, in Set for Life, since this is a VUL plan, you can make a withdrawal. For a partial withdrawal, the minimum amount is 5,000 pesos. However, if we do withdraw, we need to make sure the minimum account value after withdrawal is at 10,000 pesos. Then lastly, for the death benefit is whichever is higher between the sum assured, the account value, and the minimum death benefit. Now, for the next page of the illustration of benefits, we have all our policy charges indicated here. So you got your premium charges and you got your regular top-ups and your lump sum top-up charges here. On number 2, you have your insurance charges, which is also indicated on our payment section. Okay, so our initial charges for the first year is at 1,363 pesos. For our fund switch, it would be dependent if it's done online through tap or over the counter. If it's done online through tap, the minimum amount for switching is 5,000 pesos or 200 US dollars. The minimum remaining per fund balance should be 5,000 pesos or 200 US dollars. This can be done anytime for free. Now, if it's over the counter, minimum amount for switching is at 5,000 pesos or 100 US dollars. Minimum remaining per fund balance is at 5,000 or 100 US dollars. Now, for your first switch per policy year, that's free. After the first switch, that's going to be 1% of the amount switched. Now, this is our premium charges for our different payment terms. So you got your premium charges for our 5-pay, 7-pay, 10-pay, and regular pay. Also included here is our fund allocation after the premium charges. Now, for the last part of our illustration we got is our total living benefits, which is our account value. Okay, remember on our illustration it's at 4, at 8, and 10%. However, in reality, our account value would be the number of units multiplied by the unit price that would be dependent on our fund. Okay, next part, you got your maturity benefit. So your maturity benefit at the age of 100 will be equal to your account value. Okay, and then lastly, you got your death benefit. Our death benefit is going to be whichever is the highest between the sum assured, the account value, and the minimum death benefit. To go over a couple of policy provisions that we have in Set for Health, you got your cooling off period. When we say cooling off period, this is also known as buyer's remorse. So the insured or the owner has 15 days to think about if they would like to continue the policy or return their policy back to FWD. Do take note, the 15 days is going to be 15 calendar days. So if they do decide to cancel their policy within the 15-day calendar period, we are going to refund their money. Okay, now what are we going to refund? We will refund, first of all the charges, so the premium charges and the insurance charge, and the next thing would be the actual account value. Okay, so they may get a higher amount if the unit price did go up, or they could get a slightly lower amount if the unit price did go down. Our next provision is the incontestability clause. So FWD cannot contest this policy or investigate this policy after it has been enforced during the lifetime of the insured for 2 consecutive years from the effective date of the policy or approval date of its last reinstatement, whichever is later. Our next provision is the contract debt period provision. With this provision, we aim to keep the policy enforced during the first 3 years. Okay, this could be because of situations that may cause early depletion of the account value, such as high cost of insurance, cost of rider rates, low fund prices, etc. in the early years of the policy. Now, FWD allows the continuation of insurance coverage during the first 3 years, provided that all the regular premiums and top-ups have been paid within the grace period, and there should be no withdrawals made against the policy's total account value. Now, for the last part of our set for life, we do have our exclusions for the death benefit. So, in the event of insured's death, no benefit will be paid in case of suicide within the first 2 years while the insured is sane. For Safety Pro, our exclusions are illegal, unlawful acts or failure to act, or war or any act of war, or any civil or military uprising. For Sure Pro, we do have the following exclusions as well.